Everyone, welcome to the video. Today I'll be providing background on the US Federal Reserve's appetite for buying up the bond market and also share with you why exactly they're doing this. So please stick to the end of the video to figure out why. And if you're new to my channel, please know that I work on videos covering stocks, economics, and other relevant financial news. If those things sound interesting to you, then please hit that subscribe button as well as give me a thumbs up. So if we jump straight into the Bloomberg article, one thing I just want to note here is that typically average corporate bond yields is 2.75%, but back in late March, the yield was actually closer to 4.5%. Now, the reason why this is significant here is because typically what this means that corporations will now need to pay a higher yield when they are issuing bonds. So when the Federal Reserve saw this, they one thing that they noted was that the credit market was tightening up. And to really bring the yields back down so that these corporations could really raise money in a cheaper manner so they could keep their employees on payroll and not have to fire them, one thing that the Federal Reserve had to do was say, well, we're going to be really the last buyer of resort for the bond market. And that's why, when people heard that, prices of these bonds were actually able to go up because there's more demand, causing the yields to actually drop. On the next part here, I definitely want to show you just how when we look at the investment grade bond market, one way investors actually get exposure here is through the ticker symbol LQD, which is the iShares Investment Grade Corporate Bond ETF. Typically, when investors are trying to buy bonds, sometimes they're pretty illiquid, or sometimes even they're not even traded at all. So this is just a very liquid ETF fund where investors can actually buy. In case you're wondering, I would say that LQD, as you can see here, back in March 2020, the price of LQD actually fell a lot. But since the Federal Reserve announced that they would be buying a bond ETF, you can see that LQD actually really skyrocketed back up. And in fact, it actually made all-time high today as of June 30 as well. And just for some context, the Federal Reserve announced a program called the Secondary Market Corporate Credit Facility, where they will be using this to purchase these bonds. In terms of the next chart here, really this table here, you can see that the Federal Reserve is now the third largest shareholder of the LQD investment grade ETF, right? I think if we want to be super technical here, the Federal Reserve, they're actually not allowed to own bonds at all. They're actually really doing this through what is called a special purpose vehicle that they have set up. And in case you're wondering, the Federal Reserve's money doesn't actually go directly to the companies that issue the bonds, but rather the Federal Reserve is buying these bonds, these ETF in the secondary market from banks and other investment firms. That's why the credit facility that the Federal Reserve set up is called the Secondary Market Corporate Credit Facility. And in case you're wondering how much exposure does the Federal Reserve have in LQD investment grade, they actually have they own about 13 million shares, and at today's stock price of $130, it's about a $1.8 billion exposure that they have. In case you're wondering, I've also attached the fact sheet for this investment grade corporate bond. As you can see here, this ETF holds over 1,000 corporate bonds. And one thing that the fact sheet mentions is that LQD is really used for stability. So when the Federal Reserve saw that the credit market froze back in late March, they really wanted to be that secondary buyer to really provide relief in the bond market. And just in case you're wondering, here's the top 10 holdings in this ETF, which makes up about 4% of the total holdings. Now, should we be concerned of the Federal Reserve's action? Well, let's kind of put this into all context, right? So the U.S. Federal Reserve, they actually only own 0.2% of all the U.S. ETFs available. And this is for comparison to the Bank of Japan's ownership of over 70% of Japan's ETF market, right? So we still have a very long way to go before we actually reach where Japan is at. And you can see the Bank of Japan actually started buying ETFs since 2010, and they've been doing this almost at like a $55 billion annual pace. So overall, yes, I know the Federal Reserve, we are like the third largest holder in the ticker symbol LQD. So it does seem alarming at first glance, but we still have a long way to go before we reach the Bank of Japan scare level. And, we still have a long way to get there, and we're not buying single stocks yet, right? So overall, definitely just wanted to share this video with you all so you understand what the Federal Reserve is doing, their action in the bond market, and then also just like, for example, like the LQD making all-time highs like today as well. So that's pretty much it for my video today. So if you found it helpful, please hit that subscribe button as well as like and share the video. If you leave a comment, I promise you I'll respond back and share my thoughts with you as well. Thank you all again for watching the video. Until next time, bye.